Hey everybody, this is Sir Pips a lot. I wanted to put out this video. I've been initializing some trades with our trading room, and some major trend shifts, reversals taking place as we speak, and some very lucrative opportunities to get in on several markets. I'll go ahead and highlight them briefly for you guys. I just kind of wanted to put this video out there for everybody. Kind of serve as a point of reference. Nothing's for sure out there. You never know completely what the markets are going to do, but feel very strongly, and I'm very aggressively in on these. All right, guys. First, let's take a look at stocks. Okay, what we were looking for was a break of the 1057 level from earlier this week, the lows, and once we broke through that on I believe it was Wednesday. Right after existing home sales news, that was the signal that a more major multi-day, probably multi-week high was in place this week at around 1080. All right, but it just so happens with the format of the rally we've seen over the summer. We were looking for a three-wave rally, and we got it. The rally that would probably last through the summer. We got the A, B, C rally. We're just starting to curl over. The subdivisions within this wave C appear to be very complete, which means if we get a multi-day or multi-week high here, it'll probably there's a good chance it may end up being the highs of the year. So I'm aggressively short on stocks. I bought put options in March. My general strategy is to buy put options 3 to 6 months out. And then when they become about 3 months out, if I want to stay in them, I'll roll them over 3 months back. So I'm buying March puts on the SPY right now. And when we get into mid-December, I'll probably roll them over into June, assuming I still want to stay short at that point. Taking profits along the way. But we're looking for a sell-off to new lows. In fact, I'm talking about the 400 level on the S&P, which is pretty ambitious. It might take a year or so to get down there, but it could come in real sharp, fast bursts. So I really think the time to get in is now or sometime very soon. Do your due diligence and everything, but short on stocks is a great opportunity with us still relatively close to the high from kind of a position trading standpoint. All right, guys, next up is the euro. We were really looking for my chart's a little bit of a mess, guys. Apologize, but we were really looking for this this rally here to be a final wave 5. Once we broke out of this kind of fourth wave consolidation, final wave 5 up. We weren't quite sure how it was going to go. Oftentimes, you can see big blow-offs to finish a move, like what we saw here back in December. Big sharp blow-off, sharp reversal before we headed lower. And this time it wasn't quite as sharp, but it was still the wave 5 ending. We're not fully 100% confirmed on this yet. We need to go through the daily chart fib at 46 at 46.20, and just for that extra bit of confirmation, through the lows from Monday, September 21st, right around 46.10. Once we trade down through 46.10, game on. I'm actually short, from this region already on the euro, but with a wide stop loss at like 1.5 in case this just turns out being a big flat and we go a little higher. All right, once we trade through 46.10, plan to add to the position, tighten the stop loss down to either 48.60 or even 48.10 or 20. We really shouldn't get into this region again if we are getting a more major trend reversal. What we're really looking for here on the euro is some sort of major decline of the current range. All right, looking at it here, we're looking for a more major retracement. So, the 61.8% retracement of the rally from the March lows is right around 133, 134. So this is kind of a good target for the first couple of waves of this thing going down. All right, but ultimately, there's a good chance that we're not just going to have a retracement lower, that we're going to have a reversal that's going to exceed the March lows. So we're talking maybe the 1.1 to 1.15 region on the euro is a very likely target. But in the meantime, I don't want to hold this thing for a year, driving this thing short. I'd rather capture a big piece when it looks mature, get out, get back in a little higher, things like that. So what I'm really looking for is a 61.8% retracement to about the 134 area here on the euro over the next few months. All right, last up is silver. I think both silver and gold and almost every commodity out there is making this turn lower as well. But I think silver is the better opportunity because of the waveforms here as well. We should see on silver, again, a decline below its lows, in this case of last year. All right, it's very likely we're going to see that. So decline below 844. Right now, you can set $1.50 or whatever stop loss and maybe make $8 to the downside. We're talking a 50% sell-off. On gold, we might only get a 25 to 35% sell-off. So I think silver's more lucrative, especially with the turn lower in stocks. Silver tends to have a lot more risk appetite, risk aversion, related flow corresponding to the stock market. Whereas as the stock market sells off, gold might be a little more supportive because it's an alternative investment class more so than silver. Silver's more of an industrial metal. So looking to trade that lower as well. This video is coming out a little bit late because we've already been in these positions for a day or so at a little bit better prices, but there's still good opportunities out there. To the point where I'm calling up all my buddies who listen to me for trading ideas and stuff, and letting them know about this stuff, telling them ways they might be able to take advantage of it. So, I thought I really want to put this video out there and kind of get on the record with this and get the word out. All right, guys. So that's gonna do it. This is Sir Pips-a-lot signing off. Take a look at these things, see if there's ways to take advantage of them. You can go to profitmongers.com to see the reorganization of the trading room we're putting together, and you also have free resources available at forexrazor.com. All right, guys, take care. I'll talk to you folks